Hi, my name is LJ Aguinaga, certified real estate broker with LJ Realties. Today we'll be talking about mortgage insurance premium. You're gonna see at the top I've put CMHC. There are actually 3 companies that offer it: Genworth, Canada Warranty, and CMHC. However, because CMHC is backed by the government, it is the largest company that does mortgage insurance premium, and they take care of most of them, if you will, okay? So when talking about mortgage insurance premium, the first question is, what is it? What's insurance premium? I don't really understand. So very simply, Canadian banks are very risk averse and they like to be very conservative. So they consider anyone purchasing a home with less than 20% down to be a risky buyer. In order to circumvent that or go around that, CMHC has come in order to facilitate the purchase of anyone with less than 20%. So what they do is they basically, depending on the down payment that you put down, they charge you an insurance premium in order for the bank to approve the loan, okay? So we're gonna talk about what is the insurance premium, how it works, and depending on down payment, how much it's gonna cost you. All right, so let's start off with the minimum. Right now in Canada, the minimum down payment is 5% when purchasing a property. Some people say, I thought it was 20. It is not 20. We can still buy a principal residence with 5%. If you want more information on that, be sure to reach out to us, okay? So if you look at putting 5 to 9.99% down, your mortgage insurance premium would be 4%, all right? And in a little bit, I'm about to explain how that 4% is gonna relate back to your final cost. If you put anywhere from 10 to 14.99% down, your mortgage insurance premium would be 3.1%. Next tier is 15 to 19.99. We're gonna be looking at 2.8. And the last tier is 20% or more, and you may have guessed it, you're not gonna have to pay any mortgage insurance because you are no longer required because we've hit that 20% down threshold, okay? So this is basically the breakdown of down payment versus premium. What I'd like to go over now in a second is how that looks in a standard example, okay? So just give me 1 second. And we're back. All right, so I'm gonna go through an example right now to make this make a little bit more sense. I know it's a bit intangible, so let's start with this in order to give everybody a bit of clarity, okay? So if we start with basically $300,000, which is currently a good starting point for a condo in Montreal, we're gonna use the 5% down example. We're gonna make that 5 look like a real 5. And if you take 5% of 300,000, you're looking at $15,000 as your down payment. Okay? So in order to calculate the balance, we have to go 300,000 minus the 15,000 that we're putting down, which is gonna give us a balance of $285,000. Okay. A few minutes ago, I explained to you what the insurance premium was going to be depending on our down payment. So if you remember, we're putting 5% down, which means that our insurance premium in this case will be 4%. So 4% of $285,000 will be $11,400. So you say, LJ, am I going to have to put that out of pocket? No. The beauty of the mortgage insurance premium is that this will be included in your mortgage. So if I go 285 plus 11,400, it's going to give me 296,400. This will be your actual mortgage amount. So the nice thing about the insurance premium is that although yes, you have to be aware that you are paying it, you will be paying interest on that as well as the actual loan throughout the entire amount. It is all one mortgage, and this is what gives you the accessibility to the mortgage and to actually purchase a property, okay? So people often ask, well, I really want to wait till I have 20% in order to save myself the CMHC premium or the mortgage insurance. I say, you know what, if you're close to getting to 20%, 100%, take an extra month or 2 to get there, no problem. But if you're not close to it, you're really at 5% down right now, it's imperative to get into a property today, tomorrow, yesterday even if possible, because the more you wait, the more appreciation is going to go up, the longer it will take you to get to that 20%, and you're losing out on all these potential gains right now in the current market. 2018 and 17 and even 16 were excellent years in our Montreal market. You want to take advantage of the 2019 run that we're seeing right now and really catch this wave before it sort of passed you and you get to go back to standard inflation as appreciation, okay? So my recommendation is always buy yesterday, buy today, but get into a property as soon as possible because there are a lot of facilitations out there. Canada's done an excellent job in making home ownership possible for everybody. Everyone's situation is obviously different, but please get in contact with us. We'd be happy to work with you on your situation, okay? Stay tuned for the next episode. Thanks.